Yes.
Hello, everybody, and welcome. Happy Monday. I see people are starting to trickle in now. We'll give everyone just a chance to get settled before we get started. Jeff, John, Josh, Peter, Theo, great to see you guys. Hope you had a nice weekend. Welcome back. We're going to get started in just a minute here with today's Profits at Noon. Thank you so much for joining us. Gerardo, I see a few more people trickling in. So welcome to Ninjacators' new weekly live event called Profits at Noon. We are going live 3 days a week at noon Eastern time on Mondays, Wednesdays, and Thursdays, where we will show you the levels that we are stalking for entry, and we will steer you clear of the market traps and news bombs that are waiting around the corner. So this means in addition to all the cool live analysis you're going to see and the levels you can copy and the trades that you can stalk, you'll get to stay with us and see these trades in action. So also something in the works that I want to mention to you guys is that we will have a newsletter that will accompany these live sessions, which we call our Levels to Lock newsletter. So you'll see today during the analysis session, we do cover these levels to lock at each of these Profits at Noon sessions. So welcome, everyone. I see we've got a pretty good group coming together here. My name is Nate. I usually co-host these sessions with our very own Richard Krugel, but today we have a couple of special surprises for you. The first of which is that our co-host for the day is a one Kyle Kinney, the man, the myth, the legend. You guys know him and you know him well. He'll be taking the reins for Richard today and leading the analysis in this session. Richard will be back on Wednesday, however, so he'll be back in the mix before you know it. In addition to Kyle's presence here today, I also do want to let you know we have another special guest. We have a featured guest for today's session, one Tony Edwards of Trader Smarts. Tony Edwards is an independent trader based in Seattle, Washington, who specialized in trading the YM for many, many years, switched over much to you guys' pleasure. You'll love this. He is now an ES addict as of 2020. So he's been trading the ES pretty heavily. He's got some pretty cool software he wants to show you guys. So when Kyle's done with the analysis and those levels, I'm going to check in again really quick and we'll bring Tony in so that Tony can share with you his software as well as a new trade setup he wants to show you. So again, welcome. Thank you, everyone. We're going to start today's Profits at Noon session. So without further ado, I'm going to pass the reins over to Kyle Kinney now, and he's going to get us started, and we'll circle back later for some Q&A.
Awesome. Thank you very much, Nate. Appreciate the guest appearance here today. As Nate was mentioning, Richard's out sick, so he'll be back in the saddle here on Wednesday. But I'm excited to be a part of this, and my first time here at Profits at Noon, and excited to kind of to go through this. So welcome today, guys. Let's go ahead and get through the disclaimer here real quick. To switch here. All right, as a reminder, trading does carry significant risk, and all information in today's session is provided for educational purposes only and is not an offer or recommendation to trade futures, stocks, options, or Forex. All right, I got the legal stuff out of the way. Let's get to the good stuff here, guys. All right, let's go ahead and go through some of the news, especially for the week starting here on Monday. So we had durable goods orders that came out here today. We also had pending home sales. It's actually not signified here. We did have pending home sales here at 10 o'clock as well, came in pretty positive over the previous number here as well, especially month over month. Yeah, durable goods came in pretty disappointing here as well. As far as things to look out for, especially between now and Wednesday, not a whole lot on stateside at least, but we do have some news coming out on Wednesday. ISM manufacturing PMI. As well as the ISM non-manufacturing PMI coming out here on Friday. One thing to note as we wrap up this month here, pretty volatile, kind of crazy month here in February, as we're getting into the month-end flows today and tomorrow, that can add a little bit of complication to trading, add a little bit of volatility to trading at times as well. So just something to note and be aware of as we navigate these markets through the next couple of days. There's plenty of times where you could be into a trade and, a move happens not based off of news or anything like that. It could be, it can add a little bit of a flavor, a little bit of spice to your trading. So just be aware of that over these next couple of days. But should pick up back here in Wednesday, especially with ISM manufacturing PMI, should provide a pretty good jolt to the market if they haven't been a little bit volatile here already. All right, let's go ahead and jump into the analysis here, and we're going to run through the markets, and it'll be my flavor here today. I know Richard has his spin on it as well. So we're going to go ahead and start here with the ES on the daily time frame. And then we'll work down to the lower time frames here as well. But we're going to start from the higher ups and start working our way down, market by market. So daily, let's go ahead and go into the ES here. We're in this range previously you can see here from the 2nd of February, about mid-month, started to break out, kind of almost looks a bit of a fake out here initially, but I started to finally break out here towards the end of the month and pick up a little bit more of a direction here. I kind of tied up here once again, right around the 4,000 level here in the ES. The market loves round numbers, especially this 4,000 number. You'd like to see if it can, hold as support, but when you're trading, as with anything else, it's hard. It's important to obviously build a evidence-based bias of what could potentially happen in the market, but be prepared, have a plan B when it comes to trading the market. So right now, tied around 4,000. If we continue to move down here, good level right around here, around 38.50. We had some pretty good volume here back in December. If we continue this move to the downside here, right here in the middle of all this volume here, we have a level to keep an eye on. Again, this is more longer term base, but 38, right around the 38.60 area, but especially at 38.50 would be pretty significant. We could also find some support around the 39.22 area. So currently bouncing off of 39.50 from Friday, and really just tying around this 4,000 level here. Coming into the lower time frames, a couple of projected levels that we are currently looking at here on the 60-minute time frame. We do have a projected low right around the intraday here, right around 39.68. Coincides nicely with the overnight low that has been put in here, just above that here, right around 39.72. So nice. You had a good move higher, nice kind of fake out here towards the upside, and kind of been pointing down here ever since. So again, tied up around right below this 4,000 level. We'll see if this continues to hold. We continue to move down. 39.68 would be the next projected range low here, as well as the overnight low around 39.72. So right here in this area, if we do have a pretty good reversal, that would, this is last week's close down here. If we come back to the daily chart here. All right, so the close is right down here. So that'd be a pretty good reversal, nice fake out to the highs, and then nice close below last Friday's low here as well. So we'll see how it shakes out. But if we start to reverse from here and we start to find a little bit of support, we could find some support around current levels here, 39.86, and then projecting up. We would look at the previous day high. Looks like it's at 40.23. Our projected range high would be 4,029. So projected range high 4,029.25. Low would be 39.68. But there are a couple of problem areas right before that, namely around 39.73 on the downside and 40.23 on the upside. So we'll see if we can hold going into the afternoon here. Again, we'd like to see if we can hold around current levels here. If we start to break around this area here, you can certainly see that projected range low getting hit. But if we can mount a bounce here, those are the levels that we are currently looking at. Moving forward here, let's go ahead and go into the NQ. All right, NQ, very similar story here. If we continue to bounce around, you can see actually, if we were to look at this area right through here, a lot of previous volume you can see kind of stacked up through there. As a matter of fact, if you were to split this right down the middle, level to watch coming up would be, second. There we go. Gremlins in my NinjaTrader system here. The 11,850 level here in the NQ. If we continue to move to the downside, so right now, kind of back into this kind of a high traffic area here in the market. But again, if we bounce down, 11,850 would be the next area. As far as the top side, if we continue to move up again on more of a longer term basis here, we could certainly see a revisit down to up to the 12,400 area. Short-term resistance around 12,256. Go ahead and get into the lower time frames here. All right. So again, looking for some support right around this 12,060 area. You can see that we closed actually right at 12,000 or right about there last week. We had an overnight low that's also down here as well. A lot of times when you open up the market and you're trading above the prior day's close, especially in a move like this, you'd like to see this bullish momentum to go ahead and continue. Like to see some support around current levels here to go ahead and continue this uptrend. If we continue this uptrend, the target would be 12,219. I do have a little bit of a problem area right around 12,153. As you can see, we reversed it. This is from overnight. I believe that's actually overnight low. Excuse me, overnight high was actually down here. So this is actually an incorrect level. Apologize about that. Get that fixed. But yeah, I'd like to see if we can get some support around this area. Currently, a intraday bullish uptrend. Currently, levels are supporting, but just need to see some follow through. Nice reversal here, but we need to really break above this high. Again, 12,219 would be the projected high that we'd be watching there at that point. If we start to reverse, we do have some pretty good support. We have close overnight low here, again, around the 12,000 area, nice round number. If that indeed does break, our projected low is 11,960 and a half. So we'll see if we can go ahead and keep this intact here, but currently at some critical levels here. So could really bounce one way or another, but currently a bullish uptrend, and the bulls have it, at least for now. Let's go ahead and continue to move forward here. Let's go ahead and go into the YM daily time frame here. Sorry about that. All right. Currently on the, if you were to look at this range that we are currently in, on the low end of this range here, on the daily time frame, you can see the level to keep an eye on that we're trying to bounce at here is at the low end here, 32,694. Actually, the low of that bar would be 32,686. Low of Friday would be 32,648. All right, so trying to find some support and bounce off this area. Again, we're at the low part of the range here, so kind of at a critical area of the YM. If we do tend to break down, next area to watch would be right around this 31,500 area. You can see some pretty good support through here. If we break down and break down pretty hard, but as far as this range here, currently at the bottom end, we'll see if we can get any bounce and lift here. But the bias for now, at least short term, looks a little bit more of a bearish story than a bullish story. So we'll have to see if we can get a bounce here. Moving into the lower time frames here. All right, bullish bias on the day, but nasty reversal here again. Right around 11 o'clock, started to move to the downside here. The story in the YM is a bit different than the other ones. We are holding up above this area consolidation here in the ES and the NQ. YM certainly showing a little bit more weakness than those two. The next area to see if we can find a bounce here, you can see we're coming back into the highs here around 32,880. But we do have a projected low right around 32,768, along with an overnight low here. Actually, previous day low here at 32,800 here as well. So definitely some support through here that we could potentially find a bounce on target, at least if we continue to move down here. But you can see a little bit overall bullish on the day, but currently a little bit of bearish bias going into the afternoon. We'll have to see how that shakes out. But certainly if you were compared to ES, NQ to the YM, looks a little bit more weaker than those other two indices. If we do indeed bounce from this area, we'd be targeting this. Let's see, that's a previous day high here, 33,197, but that also has one of our projected highs nearby, right around 33,241. So that would be a heck of a climb here for the YM at this point. But if we do start to turn from here, those are the levels that we are targeting right here in this area. Again, the low is around 32,768 if we continue to move down here. Go ahead and continue to move on here. Moving into the Russell. All right, so a nice bullish move here, kind of flagging here, finding a lot of, if you were to look at this area here, again, just a lot of consolidation that we're pulling back into. Hopefully can find some support somewhere around this area, which would be the 1880 area. You can see we had an initial bounce off it. Definitely need to see some follow through or break above 1918 would certainly help if we can go ahead and hold that close above there. Again, on a daily time frame, if we do indeed break down though, could look at the low of the range of this box here, right around 1850. Nice round number here for the Russell. So we'll see if we can get any bounce off of this one. We can at least support these higher prices. Let's go to the lower time frames here. All right. Again, so on a 60-minute chart here, again, bullish bias coming into the day here, opened above the prior day close here, been holding up here so far. You can see if I were to put the ES NQ next to the Russell, holding above the same levels that were this little area consolidation that's holding up here so far and providing some support to these markets. Again, YM being the weaker, it's kind of, if you look at this price pattern, it's a little bit further down here. The weaker the bunch there, but Russell's holding up okay so far. I'd like to see if this level can hold. If this can indeed break, we'd be targeting this 1890 area. We have a close. We have the overnight low here as well. Our projected low is at 1884. So if the wheels really start to come off here, 1884.20 would be the projected low and target there. If we do indeed hold up here and start to reverse higher, 1924.50 would be our next level to go ahead and target here. See on the lower time frames, nothing I'm seeing there. Again, a nice kind of bullish move here, but again, some volatility here. We really need to see if this 1900 level can hold. Right now, we're right around that 1900 area. Again, market likes round numbers, holding up well so far. Retested it here a few times. So we'll have to see if this can continue to hold. But right now, the bias looks, the very short-term bias going into the afternoon looks a little bit more bearish. We'll have to see if that can go ahead and hold here and get a nice bounce. If we do get a nice bounce, I would like to see us clear and hold above this 1907.50 area to get some higher prices. All right, let's go ahead and go into gold here. All right, so we were consolidating around this 1950 area for quite a while. Then we had a nice move out of those levels here, and just been kind of this grinding lower here, this kind of drift of death here, as I call it. Not a big fan of when the market kind of drifts like this, but does have more of a bearish bias to it. Right now, we're caught up into this period of consolidation right through here. Again, right here in the middle of this consolidation, this 1820 area that we're trying to bounce at, trying to find some support at. So that'll be a key area to keep an eye on here, but definitely have a bit of a bearish bias here so far. But this drift here, always never quite a fan of that. But if we can indeed break this area right through here, see it's kind of wedging here as well. Like to get right above this 1840. Ideally, what I'd like to see is a move above this area, then a retest, and then a move higher. So again, 1820, we get a move above 1840, retest, see if the area can hold, and see if we can go ahead and indeed move off. But currently testing a area of high volume. We'll see if that can indeed. All right, let's go ahead and go into gold here. Then we'll wrap up with oil here in just a minute. All right, you can see my vertical lines here. Let's go ahead and open this chart up here. I don't want to confuse you guys too much with too many levels here, but all right, sorry. So we had, again, this period of consolidation, nice breakout retest here. So intraday holding up well. We just need to see, if we can continue to move, get this market to continue to move higher. So far, we're finding some resistance right around this 1820 area, some previous lows. Need to see if we can break above that and indeed hold it. So we'll see. So far, right now, the bias is intraday, at least, is a little bit more bullish. If we continue this bullish bias here, 1831 would be the next area to keep an eye on here. We have to hold above this close here as well. But again, the bias in gold here, at least for the intraday, is a little bit more bullish. With, again, just have to, if we can hold that 1831, if we start to reverse from here, the close at 1818.50 here, this level here would certainly be key. If we break, if the wheels really would have to come off here in gold to go ahead and close out the day here, but 1807.60 is our projected low. But we'd really have to see things kind of unravel here. But right now, this 1818 level, if we pull back, would be a key level to go ahead and watch. The previous low here is at 1850, but if we continue to move up 1831.30, this bias continues to the upside here. All right, and then finally, oil. Now, it's something I've been watching here in oil, kind of grinding to the downside here. But there is this level 72 that's nearby, coincides with a couple of closes through here. Actually, it's a low, then there's a close kind of open through here, but there's a lot of confluence around 72. If we continue this kind of little dip moving, this dip lower here, there's a lot of symmetry and sorry about that. A lot of symmetry, and if we do move lower, likelihood that 72 would certainly get hit. So key level to go ahead and watch. Made this low right above 70 here previously, but if we move lower, 70 would be the area to keep an eye on. Excuse me. Otherwise, right before 80 would be the next upside target here, right on 79.38. Really a 79.50 area would probably be the next area to keep an eye on here. But yeah, period of kind of a messy market here right now, kind of in a bit of chop. You do have a little bit of a head and shoulders pattern here, be it kind of more of a continuation type of pattern. But I'd keep an eye on the 72. If we start to move lower here, just keep an eye on that 72. That'll be a key area to see if we get a solid breakout or reversal here. So that would be an interesting area, at least on the longer term perspective. And then finally here, let's go ahead and go down to crude oil here. Here in crude oil, opened up below the Friday's close here. Again, kind of a mixed market here right now. Pretty two-sided. Right now, if we start to move higher here, we'd have to break above the prior day close, would put us at 77.23. If we continue lower here, 74.60 was our projected low here. So right now we were hovering below Friday's close, and we'll see if this can continue. Had a little bit of an impulsive move here, but if right now it's just a mixed market. If we can continue to move lower here, 74.60 would be the next one. Projected high again is at 77.23. If we can break out of that. All right, so I saw some questions coming through. Let me go ahead and answer those. And Josh says, assume that it's not repainting. Yeah, it is not, Josh. Yeah, it does not repaint. I don't think there's anything in the code or anything like that to cause that indicator to repaint. But otherwise, unless there's any other questions, I'll go ahead and pass it over to Nate.
Fantastic. Thanks, Kyle. I really appreciate you stepping in today.
Sure.
Big shoes to fill with Richard, but I think you did a great job. We're all very appreciative. And yeah, if we don't have any other questions about today's analysis or the levels to lock, I know I promised you guys we have a very special guest on deck today. So we'll go ahead and transition over to that. If we have nothing else for Kyle, we're free to cut Kyle loose. So thank you again for stepping in today. And again, on Wednesday, Richard will be back for our noon Eastern session of Profits at Noon. So moving forward.
Thanks for having me. Appreciate it.
Yeah, absolutely, man. It was great to have you. So now we're going to go ahead and bring in our special guest. His name is Tony Edwards from Trader Smarts. So I mentioned to you, he's an independent trader based in Seattle. He was trading the YM for many years. COVID came around. There was kind of a change to the groove. He started finding sustained success in the ES, which I know you guys love to hear. And just a couple quick notes before we pass this over to him is just some interesting things to learn about him. He actually grew up, his father was a noted psychologist who developed multiple personality tests and is credited for bringing the modern statistical analysis into the field of psychology. So he grew up around a lot of this logic, reasoning, and organically kind of fell into the markets at the ripe old age of 14 and was fascinated by the crash there in 1987. So he's been on a very long path to get to where he is today. We're very excited to have him. He's going to show you a trade setup as well as some software he's excited to share. So without further ado, Tony, if you're ready, we'll go ahead and bring you in, let you take the reins to finish out today's session, and we'll do some Q&A before we wrap.
Well, thanks, Nate. Yeah, let's do it.
Absolutely.
All right, so let's go ahead and share my screen. So we're first, let's just look at the ES real quick. So this is I'm going to get into the presentation, but just since we're talking about levels here, just give you guys a quick overview of what I do. So this is ES chart for the last 4 days. It's just a 15-minute chart, no real indicators on it. And the analysis that I do is based on levels. So it's kind of cool that we're talking about levels today. First of all, can everybody hear me okay? Is my sound coming in loud and clear? All right, cool. So I'm just going to go through this really briefly. So when the session opens, we're going to be trading somewhere between what is range long and range short. And then somewhere in between there is what I call the line in the sand. The line in the sand for the day is the decider of immediate direction. So if we're trading above the line in the sand, then we're going to want to target trades up to range short, and vice versa. If we're trading below the line in the sand, we're going to want to target trades down to range long. This white number that you see here, the MTS number, is called a macro TS number. So this is a level that has macro significance. And as you can kind of see, for the past 4 days, we've really just been trading. It's been the center of the price action. So every day before the session starts, there's 3 levels above the market and 3 levels below the market that I'm looking to either execute trades at or target trades to. And that's range short, highest odds short, and extreme short, and range long, highest odds long, and extreme long. So, I mean, just, looking at this chart for the last few days, we came into range long, found buyers at range long, new session break, pushed into range short, found sellers, down into range long, found buyers. Obviously, you can see this range long shifted lower, and just so on and so forth. So here was Friday, we came down into range long, couldn't get, broke down from the line in the sand, had this little consolidation, the MTS number, broke down into range long. Buyers tried to support it, but we made this new low, and then kind of just were gyrating around the range long. Sunday, Globex opened, trading above the line in the sand. Now this level had shifted to the line in the sand. So if we got below this, we're going to be targeting down to here, but we held above it. Europe came in and opened here. On this Europe open push, we got a move into back to the MTS number in range short. Then we came and had, I think it was durable goods this morning, got this push up into the highest odds short. So pushed up, so move over range short, targets the next zone, push into highest odds short. Cash open, we just kind of extended into this 23 that's been really significant for the last couple of weeks, really, this 23 number. And now here we are right back at the MTS number. So that's just a quick overview of the analysis that I provide. And there's an indicator for 7 different platforms, I want to say. TradeStation, NinjaTrader, Sierra Chart, a few others. So now that, just to give you guys a general overview of what I'm looking at. So now that we've done that, let's take a look at this presentation. All right, so we're going to talk about some trade setups, and I think we're going to only have time to get through 1 today, but if we're lucky, these guys will have me back and we'll go through the rest of them. So we already did a risk disclosure. Let's just go over this again. As I'm sure you guys are aware, futures trading involves a substantial risk of loss and is not suitable for every investor. You could lose more or all of your initial risk capital. Risk capital is money that can be lost without jeopardizing your financial security or lifestyle, and only risk capital should be used for trading futures. Of course, past performance is not indicative of future results. So again, we're going to look at 7 trade setups. These are setups that I use on a regular basis for entries. And the setups that we're going to be looking at today, we're just going to probably get to the first one, which is the zone fade. But as this series goes on, we'll look at a consolidation breakout, consolidation pullback continuation, impulse pullback continuation, the bill move, the VWAP pullback, and the law of motion. If there's any questions along the way, just go ahead and type them into the chat, and I'm sure Nate will let me know. We can take them at the end, or pause me and we can take them now. It doesn't really matter to me. I'll let Nate decide on that. All right, cool. Sounds good. So before we talk about setups, it's important to understand that for me, a setup without understanding context is really a good way to just get chopped up. It's like, it'd be like trading a moving average cross with no context. Yeah, it may work sometimes, but if you don't have an idea of what the market's doing and what the market's trying to accomplish and a substantial target of where it's trying to go, taking any setup just outside of context is just a good way to, frankly, to lose money. So for me, context is key in everything. And in order for me to trade a level or take a setup, I need to have some bigger understanding of what's taking place, or at least what I deem is likely taking place. So, so what do I mean by market context? So, one, do we have a bullish bias? Is there a neutral bias, or are we trading under a bearish bias? And the bias can be determined on different time frames. So your higher time frame, your intermediate time frame, all the way down to the lowest time frame. My lowest time frame is my execution chart. So just so you know, I execute everything that I execute is on a 128 tick chart. So my execution speed is extremely fast, and that's across all markets. I use a 128 tick chart, 3 different 128 tick charts. One is on NinjaTrader, one is on eSignal, and then another one is on NinjaTrader. It's the same chart, it's just a different view. So the NinjaTrader chart does not aggregate data, so that's a faster chart. The eSignal chart aggregates data, so it's printing less candles per, it's printing less candles than the NinjaTrader chart. So just to give you some context of what I'm looking at when I'm actually executing. But these setups that we're going to talk about will really work on any time frame, up to a daily chart. I mean, they're universal throughout markets. This thing out of the way. Okay, so back to so context. So then the third thing is there anything known on deck to help determine context, like a news event that can immediately change the bias? So if we're trading 15 minutes ahead of an FOMC announcement, of course that's going to change whatever the current bias is. EIA inventory report ahead of oil, etc. Those are things that are known. And then so okay, so sorry, I'm confused here. Okay, so how do I determine market context and current bias? So the first thing that I do is just simply look at where are we trading in relation to the zones that I create. So if we're trading above range short, for example, then odds are just naturally that we're in a bullish bias because price has been able to push up above the range short area, which means that it's looking for sellers. If price is looking for sellers, the bias is automatically bullish. Same is true for if we are pushed below range long, then we're in a bearish bias because price is pushing down and looking for buyers. And then the next thing that I do is just simply look at the chart. So I'm looking at prior price action, what's taken place, what have we done, what is it currently doing, and then make a determination as what it's likely to try to accomplish next. And I do this across multiple time frames to get the bias for the session that I'm trading. So the big caveat, of course, to trading, it's just in general, is that, and my number one rule is that anything can happen at any time. So at any time, an outside force, other market participants, usually those that are much larger than I am, can step in and just move the market in the complete opposite direction that the context I'm identifying would be in line with. So, we could have a hedge fund liquidate, we could have a big, an order, some fund that needs to place orders. We never know, and there's never any way to know. So the only thing that we can do to kind of protect against this is just manage risk on each trade. So all of these examples that we're going to look at can be found either on the blog, if there's a blog, just Google like Trader Smart's blog, or my Twitter feed. Most of these charts were just pulled straight from my media feed on Twitter. So the first setup is just the zone fade. And this is, usually I'm taking these on my zones, the execution target zones, range long, range short, etc. But really they can be taken on any zone that you create yourself. So there's a lot of components that go into creating these execution target zones. But again, you can create your own zones by just simply looking at past price action and trying to determine areas of significance where price is likely to react. So the zone fade is taken when price first moves into the zone, and it's pretty simple. This risk on the trade is on the other side of the zone. And the width of the zone plus the context that I've just determined of price action are my factors that I use to determine whether I'm going to scale into a trade, go all in or all out, or just pass on a zone fade altogether. If we're in a very trending market, then I tend to not take zone fades that's fading the trend of the market. If we're in a choppy market, it's easier to take a zone fade. Or if we're coming into like range short or range long for the first time, I'm going to be using context to determine how fast are we coming into it. Is price likely to find buyers or sellers there, and etc. So again, context for me is just always key before I put any amount of money at risk whatsoever. So a few examples of zone fade. So here's one. This is ES from back in 2015. So we, opened up here, came down, tested the line in the sand, came into this zone, and it's just a fade. You're buying a move into the zone with risk on the other side of the zone. Of course, the first target will be back to the line in the sand. Same thing here. Put in this like double bottom type situation, and then, closed up here at 86. Here's another one from 2017. So the new session starts here. The plans are posted before the session starts. Came into, cash opened here, had this move down. It's just a buy. This is the YM. So it's just a buy inside the zone, risk on the other side of the zone, and comes and tests right into the line in the sand. Sellers step in, and then we just kind of game out the rest of the day against the line in the sand. So if you're not creating your own zones to trade, I love how Kyle just talked about, a market map essentially. You really should be creating, even if you're using somebody else's zones, like the zones and execution target zones, you should really be creating your own zones and then at least comparing them to, if you're paying for levels, because you really want to learn how to be independent. So there's nothing wrong with like using analysis. I have a lot of clients that create their own zones and then compare them to the levels that I'm giving them. All right, so next chart is oil from 2016, and we opened right against the line in the sand. We had this push up, so here this is obviously an inventory release, EIA inventory release. On the release, we pushed right into the macro TS number, pushed down right into range long, found buyers, back to the MTS number, and then just gamed out at the macro level, which kind of makes sense. It's an inventory release, so we have larger participants trading the market. Was unable to get below the line in the sand, and then broke above the MTS number, one last check of it before we pushed into range short where sellers stepped in. So again, the zone fade, you're just simply buying the market at the zone. You can buy it at the start, scale into it, buy it at the end, risk on the other side, or however you determine the trade is purely discretionary. But the zone fade, you're just fading the zone that you've predetermined to be significant. Here's RTY. Tell when this is from. I think this was this year actually. So, this was last May. So yeah, so session opened, came down and tested range long quite a bit, finally found buyers, pushed up to range short, back down into the line of the sand, back to range long. Here's ES from June of 2022. So here's a situation. We opened around the MTS number, pushed down into range long for the first time, found buyers, pushed back up, found buyers again at range long, pushed down. And at this point, I had got an exhaustion level at 41.96 quarter. So that's pretty much right in the middle of oops, go back to this chart, back right in the middle of the highest odds long. So I'm looking to take a long down in this zone against 41.96 quarter. We found buyers ahead of it, pushed back up, and now we're coming in to make a new low. We pushed right into, can't tell exactly where this is, but right around 41.95, so right into this exhaustion, which had confluence with the highest odds long zone. Then we got this strong push up. And right here, so this is this is closed right now. So unfortunately, I'm sorry, you can't sign up for it, but I run a client feed. It's just for clients. And I had noted during this day that, the 41.96 exhaustion low looks legit, that I'm expecting, favoring the long side and buying pullbacks now for an eventual move up through the 45s and to the line of the sand, back under range long, obviously meant highest odds long. We'll negate that bias, negate that trade thesis. So here we got this push up, checked into range long again from above. And then here I'm saying, okay, seller's active at the 45. This was the initial target. If we can clear it, like I mentioned before, then we're likely to get squeezed late shorts, target up over the MTS number and into the current prior highs. So we got that, pull back, and then here's the squeeze of the 45s. And then when we got up here, took out the MTS number, I noted that, so now that we've gotten lifting into the MTS number and over 45s, any pullback into that 45. So this is obviously type of a 42, 45, 75 to 42, 42, 75 TS number zone. So this zone right here can likely be bought for continuation squeeze into the close. So we had that push down, push up, and here's the pullback into the 45s in this zone that I just mentioned. And buyers stepped in. And you can just see, if you go back in time, why is this area significant? We'll just look, we have these highs, we have this consolidation, we have, this is the high consolidation before we broke out above it. So it's just logical that on a test back down into this area, buyers are likely to step in. Obviously, if they don't, it gives us a trade to the other side for an actual breakdown on what would be a false breakout. But the logical trade played out here. So buyers stepped in at 42, 46.75 to 42.42 right here. And then we got the squeeze up into range short to close the session. Hope that makes sense. Here's another chart. This is ES from, let's say, June of 2022 again. Opened against the line in the sand. Sellers stepped in at this 42.14. Buyers took us up from the line in the sand into range short. Came into, this was obviously some economic news. I'm not sure what it was at the time, but it's coming in right out, economic news coming out, 7:30 Central. So sellers stepped in at range short. Then we had the economic news that came out, pushed us straight down into range long, where buyers stepped in, pushed us back through the line in the sand, back into range short, failed to make a new high. Sellers again active at range short, and then line in the sand. Sellers again active at range short, broke through the line in the sand finally, and then took us back into range long and into a new low. Closed right at range long. So some things you need to be aware of for the zone fade. The main pitfall, of course, of the zone fade is if price just pushes through the zone and into your risk. And obviously that can happen. Anything can happen at any time. But if you have good levels, it doesn't happen very often without at least an initial reaction and an opportunity to scale out part of your trade to hedge risk on the trade. But of course it can. This is trading. Anything can happen at any time. So one thing you can do to prevent this from happening is kind of like I said at the beginning, only take the zone fade in non-trending markets. So we make new highs, we get new highs, right? Until they don't, until the greater force steps in and pushes price down. So the flip side of if price does push through the zone without giving you a scale to hedge your risk, it can be a pretty big tell that we could potentially be in a trending market or entering a trending market. And oftentimes this will lead to a trade in the other direction. So if you're stalking a long against range long, we get a significant push through, not you take a long, you get stopped out, there's not an opportunity to hedge risk. Oftentimes that's a tell that it's a go with trade on a test back into range long from below. So then you're looking to short it in the other direction. And these often lead to consolidation breakouts or consolidation pullback continuations, which are two of the other setups that we are going to be talking about next. So that's the first one, Nate. I don't know if we want to go take some questions, look at some charts, into the second setup. I'll leave that up to you.
Sure. We actually will have to wrap in just a few minutes. So I think would be great. We do have a question from our buddy Josh, who's still here with us. And then maybe we could look at a couple charts and look to wrap shortly.
Cool.
However, Tony, we would love to have you back and go through some of these other setups. So just so you're aware, everyone that's here, just keep an eye out. We will be bringing Tony back to dig into some more of these other setups. But we'll lead with Josh's question now. And if anyone else has any other questions for Tony based on this setup that we're looking at, again, we will see some more coming up. And he does have a special trial link for you today if you want to learn more about this. But Josh wanted to know, what does 120 tick roughly equate to as far as minute chart for the ES?
Yeah, Josh, that's a great question. So let me just premise that by saying the reason that I use tick charts is because it gives me a super quick ability to very quickly gauge the speed of the market. So I can take one look. I come in the morning and I'll look at the session from Globex Open. And I can just see based on how much screen real estate my 128 tick chart is showing, how fast of a market we're trading. So, in a faster market, it's going to equate to, a minute chart is just printing a minute. It's every 60 seconds, it's printing a new candle. My 128 tick chart is going to be printing multiple candles in that 1 minute if the speed is fast, and less if the speed is slow. So it doesn't necessarily equate. I don't think you can really equate tick charts to time charts. It's just really a different way of looking at the market. So, I mean, you can pull up this, 128 tick chart and a minute chart and just kind of see for yourself what I'm talking about, but they don't really equate. That's kind of the reason why I use tick charts.
Sure. Not a clean conversion necessarily.
Yeah.
Got it.
Yeah,
okay. Well, hopefully that makes sense, Josh. If you have any follow-up too for us, of course, feel free to fire away in the chat. That extends to everyone here. If you have any questions for Tony about this setup and about these zones, Josh says perfect sense. So Josh is on board. Love it. Thanks, Josh. So yeah, I know you have a special link too. So I'm going to drop that link too while we're here chatting about it. Maybe if you want to tell them a little bit about what they'll see at the end of this link, and
cool.
then we can maybe look ahead to a future session as well.
Sounds good. Let me see if I can actually pull that up. Second. Just a second here. All right, so.
Perfect. Looks good.
Yeah.
Recording stopped.
Oops. The wrong button there. You want to hit that again?
Recording in progress.
Sorry about that.
No
all right,
problem.
cool. So,
there you go. Yeah, you should be able to take it right back. There we go. We can
all right,
see
cool. So hopefully you can see this link, this page.
Yep, looks good.
All right, cool. Yeah, so if you want to check out the analysis that I do, I set up a trial in partnership with Ninjacators. Essentially what you're going to get is access to every market. So ES, YM, NQ, RTY, 6E, CL, and GC. You're going to get the written analysis there's a desktop app that runs on desktops, and then you can also access that through a mobile site, really from any device, desktop or your phone, iPad, Mac, etc. And then you're going to get access to, and so this normally runs $347 a month for every market. Just so you know, single markets are $77 a month. And then you're also going to get access to whatever platform you're using. These are the platforms that are supported. You can see this, right? I can't see it on my screen for some reason. I just can't make sure. Is it coming through?
Yeah.
This link?
Yep.
Yeah, cool. Just want to make sure we're looking at the same thing.
Yep.
So, and then you're going to get access to the indicator for whatever platform you're using. Just FYI, a normal indicator license for single platform. So if you're only using, say, NinjaTrader 8, it's $397. That's a lifetime license. If you want it for multiple platforms, it's $600, or you can lease it for $97 a month. With this trial, I'm going to give you access to that for essentially the life of the subscription. So this trial is $97. It's going to be 2 weeks. Again, you get access to all of this stuff, every market. And it will automatically know that it will automatically rebuild this at the normal rate of $347 a month. So if you want to take this trial, get access to every market, and then you say, heck, I don't want to trade, 7 markets or whatever. I just maybe want to trade the yes. That's fine. Just email me, cancel the trial, sign up for yes. I'll be sure to keep this free indicator going still for the life of your subscription. So you will not have to pay the $97 a month lease or buy the indicator license. And yeah. So feel free to check it out if you want.
Yeah, sounds like you set up a really cool deal just for our guys here at Ninjacators, our guys and gals that are with us in the live broadcasts here at Profits at Noon. So you will see there is a special link has been shared in the chat. It'll take you to what Tony is sharing on the screen now. Very cool. As he mentioned, not only is the trial going to save you a lot getting in so you can explore, but he's also finding ways to, as far as the indicator is concerned, a few other places where you're getting a break there too. So if you have any questions about that, please feel free to fire away in the chat now. We are close to wrapping up here, but we're going to be welcoming Tony back into a future session, possibly this week, to dig into some more of these setups. So the zone fade, very cool. We have quite a few more we can show you as well. So yeah, if anybody has any questions, please feel free to fire away. We'll be wrapping in just a minute, but one thing I wanted to point out that I thought was pretty cool when you and I were speaking about this, Tony, and planning for this, is just the way it coincides so well with what we're covering here. I think we established of your 6 markets, 5 of them are what we do out of our 6 here. So I think the only difference, there was a currency pair. But yeah, very much on the same page, complements well what we're doing here. So.
Yeah, it's pretty cool. I like that.
Very cool. Well, it looks like everybody is sated for the moment. If anything pops up or if you have any questions later, please feel free to reach out to us. You can go on our website, ninjacators.com. There's a handy phone number you can find there. You can give us a call. You can fill out a form if you'd rather contact us via email. But if there are any issues, any questions, anything comes up, please feel free to reach out. We are always happy to help, and we are always available. So with that said, it looks like we will be wrapping today's session of Profits at Noon. If this is your first time joining us, just want to give you a heads up. We are going live 3 times a week at noon Eastern on Monday, Wednesday, and Thursday. My name is Nate. I co-host these sessions with Richard Krugel. Coming soon to accompany these sessions will be our Levels to Lock newsletter. We hope to have some news as soon as next week on that front. So stay tuned to these sessions. Keep an eye on your inbox, and we'll have more there. And as mentioned, we'll be bringing Tony back in the future as well. So I just want to take a moment to thank our guests today. As you know, Richard was out, so Kyle stepped in. Really want to thank you, Kyle, for jumping in at the last minute and taking the reins. Did a great job today, so we're really thankful. Richard will be back Wednesday. And also just want to thank Tony from Trader Smarts here for jumping into this session, for showing us his setup today, and for sharing the special offer link with us. So again, you can expect to see more Tony. Richard and I will be back on Wednesday at noon Eastern, so we hope to see you all there. And again, we'll have updates on our levels to lock as we go. So no questions, it seems, so we're going to go ahead and wind this down. Tony, I'll give you one shot at parting wisdom if you have anything for us, and if not, we'll go ahead and crank this down.
Cool. Yeah, I mean, parting wisdom, I would just say, I would just revert back to my number 1 rule in trading, which is that, always manage your risk, because anything can really happen at any time. And no matter how good your analysis, no matter how much conviction you have, if you're not managing risk on that trade, really at any moment, you can literally get blown out if the hedge fund liquidates or whatever happens, because we never know what's going to happen in the market. So just manage your risk.
Absolutely. And that's sage counsel from the man himself, from Mr. Tony Edwards of Trader Smarts. Thank you again so much for being here. Thank you, Kyle, for jumping into the mix. And thank you to everyone who attended and has been attending these sessions regularly. We will see you again on Wednesday at noon Eastern. So everybody have a great week in the meantime. And again, feel free to reach out to our support in the interim if you have any questions or concerns. And we'll see you again with a fresh round of updates Wednesday at noon. So thank you everyone for joining. Have a great rest of your week, and we will see you soon.
Take care, guys.
Bye-bye.